Hey guys, welcome back to another episode. It's been a crazy 2 days. It feels, I think it's only been 2 days of crazy redness, and it feels like forever, right? But today I want to take a quick look at 4 stocks that are really grabbing my attention right now. Like you guys know, every week I take a look at a few stocks that I want to add or increase my overall position. Yesterday, with the heavy down day, I actually increased my portfolio very heavy on some of the stocks I talked about last week. I thought some of them were at a great buying opportunity. Now I'm taking a look at 4 more stocks to add at the end of this week. If this is your first time here, guys, make sure to hit the thumbs up, make sure to hit the subscribe button, and check out the pinned comment where I have 10 free stock ideas for you, and also a free newsletter where I share this awesome presentation where I take a look at all the stocks that I follow and my current thoughts. All right, so here let's take a quick look at the list if this is all you're in here for. The first stock is going to be Roku, ticker ROKU. And let's take a quick look. Main reason Roku stock price is down outside of the overall market sentiment right now. Weak user growth in their most recent earnings, and they also didn't meet expectations on revenue. And management says the biggest reasons is due to semiconductor shortage. They sold less platforms, they sold less TVs, which overall affects both revenue and user growth. Another negative sentiment towards there is the overall Google fight that they kind of had where they stopped having YouTube in it. I'm going to talk a little bit more about that in today's episode. But what I'm very, very bullish on this is overall strong growth in platform revenue. They have a lot of first party information data on their customers, so they're able to advertise super strongly, and I believe this is where the huge market for Roku will continue. I really do enjoy the price points near $230, and we'll see where the price is in a bit. The second stock we're going to take a quick look at is Cerence. This is ticker CRNC. This is a tier 1 company. I actually get a lot of questions about Cerence, asking why I'm so bullish on this company. First, let's see why stock price is down. This is a company that deals with artificial intelligence voice in automobiles. So kind of having your co-pilot in your car, for example, a lot of over 53% of total cars in the trailing 12 months that were delivered or produced were made using Cerence technology. So more than 1 out of every 2 vehicles. But overall, semiconductor shortage has affected due to the overall semiconductor shortage affecting car production. If less cars are produced, obviously less revenue for Cerence. But why am I bullish? Am I just bullish in the smart car? Yes, I'm bullish that, hey, the cars right now we just have pretty dumb cars, but the smart car is kind of moving along where a lot of people here, right? The phone was just a phone until it became a smartphone. I think the car is still just a car until it becomes a smart car. And I believe a company like Cerence will be one of the front runners there. But not only there, I do believe AI voice technology can be strong in other markets. And we're going to see that Cerence won some competition in other markets as well. And that's where I'm very, very bullish. It's a hopeful thesis, but it's a thesis that's currently showing that it has some fruit of labor. I think that's the correct term. But so that's it. Right now, I'm really enjoying the price point near $80, so that's super exciting. Do you want 10 free stock picks right now? Well, if you do, let's take a quick listen to today's sponsor, a great reason why I'm able to provide so much content to you guys for free. I want to thank The Motley Fool for sponsoring this video. Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 free stock picks from their popular product, Stock Advisor. Stock Advisor has beat the market by more than 4x. Go to fool.com/Jose to get your free 10 stock picks now. The third company is one that's not in my portfolio, and this is UiPath, ticker PATH. This is would be a tier 2. In short-term, valuation might be high, right? I believe this is a company that got very, very excited very early. Bullish thesis, this is a company dealing with automated software robots. Even though automated software robots is not new, the concept of including artificial intelligence and machine learning is. So that's a progress. I think software robots is something that's going to be very strong in the future. We just took a look at NVIDIA's earnings, and they mentioned how AI avatars are going to be something that's going to dramatically change the market in the next 5 years. I think UiPath is someone that will be there in the forefront, especially since in their most recent earnings of last quarter, about 2-3 months ago, they mentioned that they are eyeing a future roadmap of conversational AI with their software robots, which I think it would be very, very impressive move for UiPath. So kind of similar thesis to Cerence, kind of in that future market growth. I really do enjoy the price point near $50 right now. The final company is Crowdstrike. This is a tier 2. All of these are in my portfolios minus UiPath. So right now we've seen an increase of competition, and that kind of has seen a downgrade. We've seen some analysts kind of give up downgrades and really cause these stock prices to go down. I do believe cybersecurity is still in early phases. This is one of the leaders right now. I really enjoy the price point at 225, and we're going to see the different types of markets that they're hitting and kind of new products that they're also in. Like I said, if you guys want this presentation and all the stocks that I cover, right, stocks like Cerence, where I took a look at their earnings, feel free to sign up for the newsletter. It's free, and the link is down below. All right, so now let's just take a closer dive. So Roku right now, we can see from its 52-week high, the stock is down over 51.84%. If we take a quick look at technicals, I really do enjoy Roku at around this $230. This, to me, I believe a good portion of risk continues to be eliminated. Obviously, volatility can continue to drop stock prices. It's not a guarantee that it'll stay there, but I believe a good portion of risk has been eliminated. Roku, like I mentioned, is very big for being its streaming competitor. Many people know it for its platforms, but if we take a look at most of their recent revenue, recent earnings, most of the revenue comes from platform revenue. This is a strong growth in advertisement. We can see most recent total net revenue grew 51%, platform revenue grew 82%. Active accounts are 56.4 million. Even though it missed expectation, it did increase by 1.3 million just compared to a quarter ago. I did mention Roku is fighting with Google over, and we saw YouTube kind of get out of Roku. And this is, a lot of people are kind of wondering, hey, is this just an increase of competition? One of the main reasons YouTube was kind of forcing Roku to increase or require its platforms to have AV1 support. AV1 support, you need extra chips, and Roku is already pretty cheap. So Roku doesn't want to mess up their current price points. I think Roku kind of made the right decision. They want to stay in the low price point to really grab that user growth, because then with that user growth, they increase the amount of users per day, per month, and are able to increase the amount of advertising space and the amount of advertising they're willing to sell. So then the second company we're going to take a quick look at is Cerence. Right now, Cerence is actually up 1%, about 1.7%, but we can see from its 52-week high, the stock is down over 37%. Like I mentioned, Cerence kind of focuses in the artificial intelligence voice conversational for automobiles. But this is a market that's expanding. We can see they won their first major customer in building mobility market for the connected elevator. So now they're not just in cars, they're also moving into two-wheelers. Now got their first major customer in the elevator market. So we can see this market is expanding. This is where I'm bullish in Cerence, right? Not just the smart cars, like I mentioned earlier, but the expanded growth. They also mentioned during the earnings call that they have an awarded letter from a whole new market, not the two-wheeler, not the car industry, not the elevator industry, a whole new market that they're still kind of trying to see if this is a viable market that they should move into. But once I hear more about it, I think it continues to show that this is one that can continue to grow and has huge optionality. Quarterly revenue grew 7.5% year over year. It's not your huge growth story, but remember, Cerence has to deal a lot with car production. Even though, for example, for the upcoming full year, they expect revenue to be somewhere between 400 million to 425 million. That's representing about a 7% year-over-year growth. They have some legacy system. If we kind of ignore this legacy system, the actual growth would be about 12% at midpoint. This is at the same time while IHS auto production forecast is expected to be flat. So somehow they're expected to grow their revenue over 12%, but car production is expected to remain flat. I think that's bullish in sentiments of the other markets that they're also expanding into. Next, we're going to take a quick look at UiPath. Like I mentioned, software automation. Stock price from its 52-week high is down roughly 42.75%. So UiPath is one I've done numerous times in. I have never purchased, one that would probably be a first entry if I do buy. But like I mentioned, they are a software automated robot, RPA, I believe it's called, right? It's robotic process automation. Robotic process automation is something that's not new. What I believe it's new and is still expanding is the ability to add robotic process automation with artificial intelligence. This will be able to create a super smart software robot that can do even more tasks than they're currently available to do. Still very early. It's one that they are expanding and where I see UiPath going in the future. Even Perfect, I mean, they're working with some other enterprise. For example, Crowdstrike and UiPath partner to secure robot-led processes with the first of its kind integration. Together, Crowdstrike and UiPath automatically detect threat activity, whether initiated by humans or robot, to grant the security team real-time visibility across the environment and enable proactive response. So we can see how this kind of software automation, it's not just used for like doctors or people that need simple tasks being done, but a great company like Crowdstrike can also integrate their robots into another service, which I think is super, super important. I do want to say one of the biggest impacts or one of the biggest bearish flags for UiPath is their valuation. For example, for the estimated year of this year, which will end January 31st of 2022, they expect ARR to be about 876 million, and currently the company has a valuation of about 25 billion. But again, this is a huge market. This is a company that I believe will be very, very volatile. If we take a quick look at technicals, here's Cerence. Right, didn't take a quick look at Cerence. Cerence is looking pretty impressive around these 82 levels. I personally enjoy it. And now if we take a quick look at UiPath, I really like it below this 50 levels. Obviously, stock prices can continue to go down. Finally, we'll take a quick look at Crowdstrike. Right now, sitting next to that 230 level. To me, it looks impressive. And that is the fourth stock, right? Crowdstrike right now is down about 2.3%. We can see from its 52-week high, the stock is not down too much, about 20%. That's a lot, but compared to the other ones we've seen, it's not a heavy amount. Market cap is about 53.24. For those not familiar with Crowdstrike, they are a company that provides endpoint cybersecurity solutions for enterprises and many more, right? They definitely won numerous awards and have become one of the leaders in this platform. Crowdstrike most recently kind of acquired Secure Circle to enforce zero trust data protection, again, increasing their overall technology, increasing their overall solution, and increasing their lead in this market. Next, we can see Crowdstrike. I do want to say, even though annual recurring revenue is 70%, grew 70% year over year, it's still about $1.34 billion in their most recent earnings. They expect to report earnings in the upcoming week. The upcoming weeks, I believe. I think it's actually this week, maybe, or next week. But I want to say, compared to its valuation and ARR, it is at a hefty price, very similar to Path. But overall, these are four companies I'm keeping an eye out. In forms of preference, I think I actually don't. I think I might actually purchase all four this upcoming Friday or Monday. But I hope you guys enjoyed the video. Take care, have a good night, and see you next time.